Welcome to Accounting Principles Chapter 8, Part 1, a discussion on internal controls. We are going to go over number 3, P3, prepare a bank reconciliation. A bank reconciliation is a report that explains or reconciles the differences between the balance of the company checking account as compared to the company's books and records cash account. The steps in the bank reconciliation to the books and records starts with the comparisons of the bank balance to the book balance. The processes are done step by step, and it can be quite time consuming depending on the amount of activity in the monthly accounting cycle. You want to start looking at your outstanding checks that haven't been identified on your bank statement as related to your records. You want to look at deposits and transits or outstanding deposits, any deductions for uncollectible items and for services. Additions would be for collections and for interest. Additionally, any errors that have been identified either by the bank or the company. The reconciliation process is important in your fraud identification. This can uncover some activity that maybe would not be noted when you're doing your daily entries. The purpose of the reconciliation is to adjust the beginning bank statement cash balance to the ending cash balance after adjustments as compared to the books and records beginning and ending. Ideally, they should reconcile and or balance. So on the left-hand side, you see the bank cash balance, any deposits in transit, as we mentioned. You subtract any outstanding checks, add or subtract any errors. You come up with the adjusted cash balance for the bank. The same on the right-hand side for your company books. You add back collections and interest, subtract uncollectible items, adjust for any errors, and you have a new adjusted cash balance. The reconciliation process should have these two balance in a perfect world. Here's an example of an actual bank reconciliation for Video Buster. It shows, again, on the left-hand side the bank adjusting entries, as well as on the right-hand side the book, and it shows that we have adjusted balances at the end of the accounting cycle of $1,845. This would be the beginning balance of the new accounting cycle. Now, this visual aid will be a nice resource to assist you in identifying if you do find errors and you cannot get the bank account to reconcile to the books and records. It shows you, what needs to be adjusted: unrecorded deposits, outstanding checks, bank service charges, debit credit memos, insufficient checks, interest, and errors. It's either going to affect the bank balance or the book balance. And again, any discrepancies that you can identify for errors found in checks that have cleared for the wrong amount, deposits that were not entered right, it's going to determine how you're going to reconcile those records.